Hey traders, welcome to Charts and Coffee for Tuesday, October, what is it, the 12th? All right, so let's get into it. Happy Tuesday, everybody. Let's take a quick look at the economic calendar for today. And yesterday, while we had the bank holiday, we could definitely see by around 10:45, 11 a.m. There was definitely that sort of lethargy. We definitely saw there was lower volume, and it acted like a bank holiday where you have some markets close, for example, bonds, and then you had other markets open, equities. Moving into today could really be considered the first fully participated trading day of the week, and we have the JOLTS job openings at 10 a.m. Normally, I'm not going to pay a lot of attention to a medium heat hot zone because it's a JOLTS job opening. Yeah, it's kind of interesting, but when we're looking at mapping forward to taper, when we know that sort of the fifth pillar of macro for the Federal Reserve in terms of their dual mandate of the inflation target and jobs, yeah, JOLTS is probably going to have a little bit more of an impact. And then at 11:15 and 12:30, when we go into the midday doldrums, we've got Clarida and Bostic, and that is most definitely going to influence the latter half of the day. As we go into the second half of the day, around 1:30, 1:45, as we come out of the lunchtime doldrums, the midday doldrums, and we're looking at the mood for the close. Heads up, because that is likely going to be how the market is going to line up for tomorrow's CPI, for the FOMC meeting minutes, for Brainerd, for Bowman. I mean, we've got a lot still to come. So keep an eye on those Fed chucklehead events. And you can do so very easily over at Forex Factory, which is what I do on a regular basis. All right, so that is what we've got coming up. And let's jump on over to your questions. All right, so first up, good morning. Good to see everybody. What are my thoughts on the AA chart? All right, so if we think about AA, and then we kind of work in that whole, again, passive investing. What does that even mean? When I say that the market's influenced by the passive investing universe, I'm talking about the way in which the markets are influenced by ETFs, by sectors, by these group of stocks. So, we start looking at Alcoa. Immediately, I start thinking XME. I start thinking, mostly XME, which is the metals and mining ETF, the SPDR, metals and mining ETF. So I not only need to know what Alcoa is doing in its own right, but then I need to also remember the influence that that group, sector, niche, whatever you want to call it, but that group of stocks, which is going to be influential over that group of stocks is going to be influential on each other. It's going to be influential on the ETF. The ETF's influential on the stocks. And then all that has to do with the weighting, right? So here we go. Loading up the XME, and you can see that it's the number one weighted name. You've got a relative outperformer here along with CENX. Be careful, because XME, while heading lower, isn't heading higher. So you've got a relative outperformer on your hands, which is, not a bad thing. Now, this is the process. This is always the process for watch list building, pre-trade decisions about what we're going to trade. I mean, that's what a watch list is, right? So I'd keep an eye on it. I'd be a little bit more cautious. We've got earnings coming up, so I'd wait till after earnings because you're inside that higher implied volatility. I will usually not play anything this close to earnings, but if I were to do anything, I'd probably look for a long call, but just be careful in terms of Alcoa being a relative outperformer, one of only two within the XME. All right. So, look at it this way. Whenever I look at a group of stocks, whether it's the group of stocks within an index, a group of stocks within an ETF like XME, think of it as, what's the rest of the team doing? Is the team playing well? Is this the one player within the team that's sort of accelerating that day? Is there one team player, meaning stock, that's underperforming and the rest of the team will help out? So you've got to think of it like you would Monday Night Football. How's the team playing, right? You could have a QB throw for 400 yards and still lose the game, right? That was a pretty good game with the Ravens and Colts yesterday. Thanks for the question. All right. So next up is who do I like for the World Series? Look, Brandon, if my Bo Sox aren't in it, and if the O's aren't in it, I'm usually, just rooting for American League. Yeah, I'm usually an AL girl if all else fails. So, uh, thanks for the question. All right, next up, what are my thoughts on solar? Sure. So again, let's kind of step out to the broader group, and we'll look at tan. Right, that's probably one of the better places to look as far as that niche that is solar. And then I start thinking about the holdings. Now I don't see a lot of clarity on tan. We're still below the 200, but again, what you're actually seeing is the process by which I build watch lists. Whether that's going to be dealing with chop, whether that's going to be dealing with a trend, whether that's going to be ultimately dealing with um, a downtrend, right? Tan is a mixed bag when I look at where it is just chopping around. This is where choppy distribution fades. If you don't know what that is, you're definitely going to want to check out the webinar on Wednesday. So a lot of folks have asked me, Rob, the webinar on Wednesday, is it similar to what we're doing, what we did last Wednesday? Brand new examples. So the webinar on Wednesday built the foundation of, look, at the end of the day, I still need you to prioritize trends. They are out there. And I've talked about that in the free videos, things like long gas, long oil stocks. Those things are still working. There are trends in this market. But then, of course, we've got the indices that are very much in chop. So we've got S&P in chop. NASDAQ might be the first one to organize into a downtrend, but for now it remains in chop. Russell's been in chop almost all year. So we do have chop that we're dealing with as well. So, in terms of the watch list you're building, you're building watch lists of things you want to buy and things you want to sell, but you can even get more granular and sort of shape up a watch list that is uptrends, downtrends, and no trends. And then that's going to help you further strategize. What am I looking to do in an uptrend? What am I looking to do in the downtrend? Those are two different strategies. And what am I doing in chop, which is an entirely different strategy. So if you're frustrated by this market, it's not just the rotation sectors, it's rotation in the market trends. So on this coming Wednesday, we're going to have examples of chop. I'm going to show you how I trade chop, how I trade downtrends, because those are the other market behaviors that we have to, know how to identify consistently, objectively, and then we have to pull the right strategy to be able to trade it. So when I look at something choppy like tan, this is going to get put in the category of what do I do with chop? How do I measure the chop, right? What tools am I using to measure the chop? And then how do I go about fading it? And in which direction do we fade? Am I going to fade to the short side? Am I going to fade to the long side? What are those zones? And so my thoughts on solar are, for now, fade buy to potentially fade sell in a range of about 77.50 to 87.50. And that's where, I could play solar like that, but then, I might look at ENPH and try to determine if ENPH or SEDG or FSLR, where might there be better clarity at the individual stock level. So remember, if you sort of use the sector as the pivot point to pivot up to the index to understand what the Dow, S&P, NASDAQ might be doing, or just sort of the pivot to the more granular level, pivot down to the individual equities, you'll always find that sector is the touchstone for both. And that's so important, especially when you look at something like solar, like tan there, Brandon. Great question. Is it time to short the SPY? David, I did a video on Friday that talked about what I'm looking at in terms of short on the NAS. So it was actually the NAS that I was interested in shorting more so than the SPY. And let's go back to the sectors for a minute. Think about what's going on within the NASDAQ. Okay. XLC, XLY. Down, down, chop, right? Weak, weak, chop. I won't say down because this is not a downtrend yet, but look at the predominance of the red grab candles. Now let's take a look at SPY. What we're doing is, I might be eating a cookie, but we know inside the cookie went sugar, flour, eggs, milk, whatever, right? Chocolate chips. What are the ingredients? What is making up this index, and then what's making up the sector? So I look at from the index level to sectors, index sector stock. We're going to look at XLK, XLF, and XLV. So I've got this great downturn in XLV. I've got this pretty resilient strength in XLF, and I've just got chop in XLK. I think to put the finger on the S&P is far more difficult than the NAS right now. Now you add another layer to that NAS narrative and say TNX heading higher, relatedly, exactly the same thing. ZN 10-year futures heading lower. When the futures are heading lower, that actually means higher yields. So you'll notice TNX and ZN move inversely. So that's just another thing to add to the way in which we're looking at tech, and start putting all that together. And all of a sudden you realize, this is where my edge is. I would say SPY, and I'm trading that more at the sector level. I think the clarity and the edge for S&P is more, let's short healthcare and let's get long financials, right? That's what I mean about understand this kind of rotation. And by the way, this is exactly how I trade in the mastery, right? This is exactly how we stock and sector pick in the mastery. So, on Wednesday, at the end of the day, what are we talking about? How do I trade options, right? And which markets get my attention in this environment that is, I think on the surface looking pretty difficult, but not really. If you can say, look, this one strategy of buying the dips or a bullish oriented strategy worked in most things for the better part of over a year at this point. But now I can't use that strategy because the environment has changed. And everything starts with the environment. So really, how do you trade any market? And in last night's free video at the Simpler Trading YouTube channel, that's a really good precursor for Wednesday's webinar. How do you trade any market? Well, first of all, you have to acknowledge just 4 market types, and then you can get to work. And then you can better categorize all the different simpler tools you have and say, oh, wait a minute, this is where I want to use squeeze. This is where I want to use ready and fire. This might be where I want to pay attention to the Darvis, etc. Hope that makes sense. So David, NAS has been on my radar since last Friday, so check that video out. And then in terms of all the different considerations for what's strong and what's weak, and what's in chop, check out last night's free video. And then all that will tie into Wednesday evening's conversation. All right, what are the dots at the bottom of my charts? That's the JT multi, Kristen, and most of the indicators on this screen, minus my V-score, VWAP, any of the V indicators, those are all tools that I use to identify automatically support, resistance, acceleration in the market, underlying market environment, and this is in the underlying market environment category. And this tool will be free with the class, by the way. And why? Because it's necessary. It's necessary to understand at the moving average level, because that's what this is measuring. If you like stacked moving averages, that's kind of lingo that we like to use here at Simpler. What does that mean? Well, we love our Fibonacci-based moving averages here at Simpler. As you know, I think that 8, 13, 21, 34 are very important moving averages to consider. However, I don't want to look at them all together. I want to look at 8, 13, 21. I want to separate the 34. And that's why there's 2 series, there's 2 rows there. So I can separate sort of the near-term sentiment and momentum. I can separate that from the trend, right? So the idea here is I want to emphasize uptrends and downtrends, separate those strategically from non-trends, which is, again, only going to be for me once I add that 34 into that calculation. So I hope that makes sense. Yeah, you'll see that on the bottom of all my charts, whether it be a 2-minute day trading chart or a end of day daily time frame chart like what we're looking at right now. And know this, if you're a day trader, you know that I trade to 11:30. What do I do with the rest of my day? I switch to that end of day daily time frame interval, and that's where these trends are, I think, most visible, right? Most visible. All right, moving on. Tim, all right, cool. We have a currency question. How much insight into the market direction can be gained from the Aussie yen carry? All right, so of course, this is just my opinion. I've been trading Forex for 2 decades now, and I'll tell you this. The carry trade, let's separate that from market direction for a moment, because I think a lot of times there's way too much made of the carry. And the reason I say that is because carry is just code for the difference between the different central bank rates. In other words, Australia typically has a higher central bank rate, as does New Zealand, and Japan usually has a lower central bank rate. But gosh, who doesn't have a low central bank rate right now? Carry trades are most appealing when that chasm of central bank rates is wider. I can show you central bank chasms carry back just even 6, 7, 8 years ago that were north of 5%. 5% difference between the two central banks. So as long as Aussie yen is moving higher and I get to collect 5% for simply being long Aussie yen, that's where that carry trade comes. It's an interest rate trade. All right. Now, take that to the next step. Aussie yen as a carry in terms of percentage is separate from this notion that it indicates market direction. Australian dollar typically is stronger. Any of the COM dolls are, Aussie, Kiwi, Loonie, is typically stronger when we have optimism about expanding economies and health of economies and a rising stock market that's a byproduct of that. The Aussie is usually strong and the yen is usually weak. Why? Because in that environment, if the yen is weak, Aussie is strong, I can sell or borrow the yen, use those funds to then buy higher yielding assets like stonks, right? So you can see where it's not a direct line, but it's almost like a circle. It's a cycle. And so when the carry is narrow, it's just less relevant. Is the Aussie yen indicative of overall trends of the market? Not as much as it used to be. Not as much as it used to be. So I don't follow it like I might have in the early to mid 2000s. It's still something that lingers, so I wouldn't ignore it, but it's not as influential as it once was. Okay. All right. Moving on to let's see. Sony pullback or reversal. So it's not a reversal. It did pull back. It's now in chop. So how about pullback is one of the things we could think about. Reversal, the idea that the market goes from an uptrend to a downtrend, or those V tops or very shallow U tops, is actually a rarity in the markets. Typically not that common. However, that being said, this is chop now. This is chop. Now, just looking at the back and forth that we've seen in Sony, I mean, realize it's a pretty volatile stock, but I'm not going to always presume that a market that goes lower is immediately going to turn into a downtrend. This is a little bit more akin to that distribution market trend where we identify oversold and we buy it. But I'd be careful with Sony. I mean, I'm just looking at all the gaps and I'm looking at the structure. I mean, I think Sony for me gets pushed aside because, well, first of all, I think the edge in this modern market environment is the way in which individual stocks are weighted within ETFs, right? That's that passive investing influence. Sony is actually really as disconnected as very few stocks can be. It's not a participant in highly volatile, I'm sorry, high volume attention ETFs. It's really not part of that world. So it's capable of doing its own thing, which is both good and bad. Bad when it's not trending, good when it is, because that's the first criteria for me for a honey badger. What is a honey badger? It's usually going to be a market that, sure, of course, it's a relative outperformer, but it's usually going to be a relative outperformer that is not connected in terms of the weighting into the ETFs or indices. So be careful with that one, Tim. It's usually not, I'm sorry, be careful with that one, Chris, not Tim, sorry. It's usually not my cup of tea for that kind of disconnection. Yeah, I'd be careful there. I'd be careful there. All right. Speaking of being careful, yes. So, question about natural gas. So we have a zone on natural gas. All right. Keith is asking, natural gas didn't hold. I don't look at this as a break of support, my friend. I just look at it as actually sinking deeper into our zone of buying. We had an aggressive level initially, and then now we're just sinking into another zone of buying. So I don't look at this as not holding. I look at this as the aggro, which I'm always going to presume may have difficulty, is sinking a little bit more. All right. Okay. So with that being said, thanks for the questions. I will see you all tomorrow, same time, same station. As always, be good to each other. I'll see you in the next Charts and Coffee.